Just like you have to find us, we have to find the clients that are right for it. Because there's so many like Bay Area tech companies, for example, that I won't even bother talking to because that's not my jam. Like, I'm not here to like provide you the most expensive fluffy benefits. Like, you can talk to a different broker for that. Like, I'm here to save you money. Like, I'm going to cut your cost by 30%. And so I'm looking for those gems that they're in need and they're ready. And then they've got people that care. You know, they've got an HR team or a CFO or somebody who really cares.
Welcome to ClaimTalk. I'm your host, Danielle Young, and I'm joined by a co-host today, Omar Arif. Omar, why don't you give us a rundown on what we're doing here today?
We got a couple stud brokers here with us today, Craig and Mike. Some brokers that have been in the game for quite a while, know our business fairly well, and we wanted to tap them for their expertise this afternoon. So here we are. Craig, you want to kick us off here?
Yeah, my name's Craig Gottwals, and I'm an insurance consultant, a broker, whisperer, advisor. You know, in our industry, we decide that we work in this kind of smarmy industry and we don't like ourselves, so we give ourselves a new name every year or two. So right now, I think we call ourselves advisors. I'm looking for whisperers in the future, but I'm an attorney, consultant, broker, advisor for the Mahoney Group.
Hey, well, that's a little bit more theatrical than what I'm going to come up with. But no, my name is Mike Kerns, and I work in the Dayton, Ohio market of the Midwest. So we do primarily the tri-state area, Dayton, Indiana, Kentucky, but we do have clients all over the country. And we've long time been very, very big proponents of reference-based pricing and the ClaimTalk solution. And so it was really a nice thing for them to invite us out here to have a discussion about what we see in the market, what we've done differently, how this solution fits in different areas. And, you know, to Craig's point there, you know, we all have different names for ourselves. We just usually go by consultant because we do figure that it's become a very complex and more consultative type of industry.
Consultant, broker, life coach, therapist.
Whisperer, advisor, recommender
therapist is probably
yeah, babysitter,
big
babysitter.
Babysitting. Oh, wow.
Yeah.
So much, especially in this space. Yeah, so it's always interesting to me. I like to hear about how people got into the industry initially, because I joke like 95% of us just sort of landed here without like a lot of intention. So Craig, why don't you tell us a little bit first about how you got into the business?
Yeah, actually, I might be a little different from that normal path. I worked at a small like boutique insurance agency in the San Francisco Bay Area the summer between my senior and year of high school and my freshman year of college, and really just fell in love with the people, like really enjoyed what I was doing. I started as a receptionist and a gopher, getting coffee and making copies, and I really dug it. And so I went back and did it again that second summer and sort of kind of charted a path where I thought, well, I do want to be a lawyer, so I'm going to go get a law degree and I'm going to practice law for a little bit and see how that goes. But if it's not great, I'm going to come back and do this. And that's exactly what I did. I was a lawyer for 2 years. At that time, it was called Liberty Benefit Insurance Services was my first client. And I did all of the things that an insurance agency might hire a lawyer for. You know, I helped them with COBRA, HIPAA, 125, ERISA. And after 2 years of being a lawyer and having to write down every single minute you bill and hating every moment of that, I said, man, I want to open the Sacramento office of what you guys do. And they're like, let's go. So that was the first month of 2003. And so that's how I got here.
Very cool. Wow. Okay. What about you?
Once again, mine was a little bit more out of necessity. I came to the industry kind of by accident through a very good friend of mine that was a broker consultant for a very large regional benefits firm. At the time, I was working in individual financial services for GE Capital and having a fairly good run of it. But I just found at that particular time I was a lot better in the boardroom than I was in somebody's living room and talking about these types of things. And so that kind of led me to looking at that opportunity. Didn't take that, but ended up working for a startup that we grew into one of the largest brokerage and consulting firms in that area of Ohio, and then took it from there. So I think, you know, we all find ourselves to the industry in different ways, and some of us just find we have a knack for it, and I think that's probably the best way to describe my situation.
Yeah, I'm curious, as you know, we discussed this last night at dinner, but I was on the broker side for several years. I'm curious, Omar, did you ever think about going on the broker side?
It's the only side of this business that I haven't been on. I've worked for a carrier, I've worked for a TPA, I've worked for a couple different ben admin firms, and now over here on the reference-based pricing side. So yeah, I've thought about it, but then I deal with guys like these two all day. I'm like, why would I ever want to be one of those guys? No, I mean, it's.
And we're a picnic.
Yeah.
We're not the ones.
These are some of our
we're not the
favorites.
ones you
Yeah.
complain about.
I mean, it's interesting because I love my job because we see so many different things every day, from like different types of broker personalities to different types of businesses. You deal with maybe newer account managers that know nothing about what we do, so I'm having to constantly tailor the conversation or presentation every day. So brand new account manager, never done this before, to one of these guys that can go as high level as you want. So it's new and interesting, and it changes daily. And so I don't think I want to go to the broker side, but who knows? Maybe Ben fires me tomorrow.
It's a long path. Life is long. You never know what's going to happen.
I've been fired before.
Right.
And if he is fired, we know who he's going to tap.
Yep. It's gonna be Craig.
Would you hire me?
Yeah.
Yeah.
Oh,
Yeah, you're a sales machine. I'd
Yeah.
hire you.
I mean,
We would have to do all the work, but we'd let you go out and sell.
Right.
I think, this business is a lot like sports, and I come from a baseball background, which you have to deal with an enormous amount of failure all the time. And so being okay with that and being able to move on from that lends itself well to this industry in general. So I guess that's a question for you guys. I mean, you just dealt with some big failure.
That's right.
You're still not over it.
I have not.
I have heard about this already today.
Yeah, you
got around fast.
You in our industry, so when I started, it was large group only, 2003. I'm a lawyer. I'm new to this. I didn't have a sales background. I started with a bunch of insurance geeks, and I was told at that time, 20 clients makes a career because we're only working on big ones. And I thought, wow, that's crazy. And it turned out that it was true. I mean, it really was. And in that short span before we sold to the bank, I think 39 clients is what I had brought in a 10-year period. Again, all large. But the hardest part of my job, and you might agree, is penetrating into new employers. Is getting
Always.
Into the new. It's once you get the meeting, once you start to show the value we bring.
That's different, yeah.
It's so much easier. But getting in is the hardest part. And so I had been on a 10 or 15-year run of, once I had gotten in and I had gotten so far, I didn't lose, right? So I had kind of forgotten what it was like to lose one.
Wow.
And it was hard. In some ways, it might be the best thing that happened to me, because I just went through a career change a bit, and I've got a new team and, a new home for my team. And it lit an even greater fire underneath me to lose again like that, because I hadn't lost in so long. And so working longer hours, being smarter, being sharper, and dissecting the mistakes I made, which it's so good.
I think that's sobering for all of us, when something like that occurs. I mean, I think our persistency ratio runs about 93% and has for the last 20 years. But at the same time, there's things that happen outside of our control. I can say in the last 5 years, what we saw a lot of was more M&A. So we saw a lot of our employer clients in the mid-market that were acquired by much larger companies and, and started doing their own thing differently, which then negates what you've built over all that time, And so, especially with the concept like reference-based pricing, and claims control and things that you're doing in that regard, you have to have the willingness and the buy-in of the right employer, and that leadership at the top all has to be aligned to, be able to have that continue throughout. And once you lose that, if you lose a piece, it's kind of like playing Jenga. One person that might be crucial or key to that gets pulled out, the whole thing changes. So, I mean, I think it's good, that we all have high persistency, but at the same time, I think, sometimes when we lose something, it makes us recalibrate, go back and say, what do we need to do differently?
Yeah, no, that's a great point, because 93 is probably, I haven't calced it, but that's probably about where we are too. And I was just mentioning to somebody the other day, we lose clients when there's a merger, an acquisition, or a change at the
leadership.
CFO level.
Yep.
Right.
That's what.
Yep.
That's when it
Otherwise,
happens.
we just don't. I mean, our team is good. We've been together 20 years. We just don't lose them. And that's why it was such a shock to lose when I was on the 4-yard line going in.
Yeah, I mean, we're all professionals, and we all have a little bit of ego and a lot of confidence. You have to be in this business. So when you lose something, how you handle that truly differentiates you from everybody else. I mean, we were talking about this a little bit last night. We have 21,000, I think, brokers in our CRM that we pull from and talk to and market to, and at most a couple of hundred of them have business with us. So it's no different on our end. You said earlier, getting into an employer is the hardest part. Well, for us, it's the same. Getting to the right broker, consultant, advisor, life coach, therapist, whatever you
Whisperer.
guys whisper or whatever you guys are calling
Babysitter,
yourselves.
nanny.
That's the trick for us. But once we get your attention, we're hitting at a higher clip. But
gotta
it's difficult.
You got to stop and think, too, there's things working against you guys as well that there haven't been in the industry previously. If you look at all the consolidation of mid to large size consulting firms backed by private equity and things, where there's huge revenue targets that are put upon, those entities once they're combined, that return desire is so intense so quickly, for a concept like what you're promoting, which is more long-term, and it's a building and a gradual approach. I can see where you'd have challenges facing that as well.
Well, and I get it. In the vendor world, everybody likes to use the phrase "brokers are idiots," and that may be true to some extent. But
Oh, it's true. Yeah, no, it's really
Let's just
true.
clear that up.
Yeah, no, it's 99%. Yeah.
But the other side to that coin is you guys have what 200-300 vendors coming at you on a daily basis. I mean, how many phone calls do you get? How many phone calls do you get on a daily basis from a carrier?
I can't tell you anymore. To
Yeah.
be quite honest, I mean, you talk about, people screen our calls when we're prospecting. We screen their calls when we're getting prospected to a great degree.
It's a lot.
It is a lot.
It's not 200 to 300 a day, though.
But you've heard the same pitch over and over and over again, and everybody's got their own solution.
Yeah.
We get that. Everybody's got to make a living, but at the same time, we're inundated with that, I think.
Yeah,
And
RX is the one. Like I do get a few PBMs every day, and I almost feel sometimes I'll talk to them and just go like, how do you guys differentiate yourself at this point? Like I feel bad for you because there's 5 or 6 widgets and you're all talking about how you pull them the same way.
Well, that's why we started this podcast, was to differentiate ourselves, because there's 8 or 10 RBP vendors out there with a national presence. We're all kind of saying the same thing. And so how do you guys have the time? I mean, because you're getting hit from medical, ancillary, RBP, pharmacy, payroll, like HR services.
Life balance.
Like everything.
Wellness.
So how do you guys take the time to do the proper due diligence to vet out a vendor to make sure they're legit? I mean, because one of the overwhelming things we hear from brokers that we bring into our home office is, wow, we didn't know all of your people actually work together in one building, even though we say it every day.
Sure.
But it's all happening here. So how do you go about like picking and choosing?
Well, I think what you have to do is, in anything, when you're doing your own due diligence, who else do we work with in the industry that we, respect, trust, what have you, see what they may be doing. It's always a nice starting point. From our standpoint is we own a risk management company separate from the brokerage that deals with 2 to 3 dozen third-party administrators nationally. So if someone's coming to us with a solution, we're going to reach out to a lot of those and say, hey, is this a solution you've seen? Is this one you're working with? What type of feedback have you gotten? Because, it's like anything else. We're all in sales. And when you're selling, you're always selling, the most positive aspect of anything. I think that is still probably one of the truest forms of finding out if something works is, being able to talk to other, respected industry leaders and things of that nature. That's also led us to a lot. I mean, when you go to the conferences, HCAA, SPBA, SIA, a lot of those have become vendor conferences, but still, you're able to work with some people within there that, have owned third-party administrators for 40 years. They've picked good solutions. But I think what you also have to do is when you're looking at those solutions is you have to make sure that you're picking ones that have, the client at heart always, and that you have the right, mix there, because I can tell you there's a lot of vendor solutions out there that are very slick. They're very well funded, very good marketing. But at the same time, I always ask myself, what exactly, what's your success? What are you really selling here? And, and that's one thing about the industry too. I think the industry's gotten to a point because everything is so expensive. Everybody's looking for a solution and they will listen to a pitch, no matter how good or bad. And there's something that we were talking about just downstairs a little bit ago is that, someone can say, well, I'm trying, we brought in this vendor, we're trying, we're doing something. But, the question is it actionable?
Is it effective?
Is it effective? Are we really getting results for that?
Everything he said, I agree with. And I would just add that, I joked about 98, 99% of brokers are failed salespeople who just want to sell insurance. They're not my kind of people. But 1% to 2% are amazing. And I, over 22 years of doing this, I've kept in touch with them. I've made those relationships. I've made connections like with you and Ben and Danielle and other vendors and TPAs and PBMs, people I've known, and I've seen them do it over and over again. I've seen how they care. I've seen how they've said They've made statements against their own interest. I've seen when they do things that are right, even though it makes them less money. So I've collected these people in my orbit, and I love them. And they make my job better because I rely on them to share with me. Like I'll come to you and I'll say, which TPAs are killing it for you? Which ones are you having problems with? So I'm just always like, as much as I'm truly, and other people laugh when I say this, I'm an introvert. Given my own devices, I would just stay inside and work on my own all day. But I force myself to meet with people just about every day because I'm always searching for that next thing.
Iron that sharpens the iron, right? Like other people that are just so excellent that they raise your level of capacity. So I wanted to back up for a second because I remember very vividly the moment that I learned about what reference-based pricing was. And I was pretty young and new in the industry. This was right after ACA had come out. And I remember feeling like this excitement because it felt like I understood suddenly how we were going to fix an enormous problem. It felt like, oh, wow, this is the silver bullet. This is going to fix, where we are. So I want to hear from both of you, like what that moment was for you, that spark where you're like, wow, this is something that could really work, and how that happened.
I think it was more something out of necessity than, a light bulb aha moment. I mean, we'd all known, anyone that's been in the industry for any period of time, that the system's been broken for a long time. And, and also what makes it even worse, it's a very opaque system, especially to the individuals we're working with, business owners and such. So I think, it always usually comes out of necessity. You have a situation either with one particular client or a group of clients that have been faced with a lot of challenges, primarily, usually price driven. And it could be from high claims on one individual or multiple individuals, or they've had a succession of problems over time. And you finally have to have that right client that says, I'm kind of fed up with this, and I'm willing to do something different. I'm willing to put up with any challenges that might come with it and be committed to that. And, once you have that, that's really what starts that conversation, and, now there is a tool, there has been for many years, much more commonplace than it used to be able to discuss this with them. And so, but it does take the right mindset. It takes the right employer. I still say, everybody should be doing it, but you oftentimes find it's not for everybody. But there's a lot of reasons for that. I'm sure we'll touch upon it later. But for us, it was kind of a situation that was right pre-ACA. It was somebody that needed it at that time due to some claims issues. And then, as we had always been talking about, why you should be self-funded and things that you should do, when ACA actually came into existence, it opened that door and allowed so many more people not only to consider self-funding, but also to do something more aggressive, with reference-based pricing. So
more out of necessity for you and came to your...
Mm-hmm. Yes. It's also a differentiator because you'll find a lot of people in our industry, going back to what we talked about with the consolidation of so many brokerage firms by private equity, they really don't want to deal in this market a lot of times. And so that does create a lot of opportunity for those that are well-versed and that are experts and specialists in it to be able to have those conversations and then lead to that level of success.
What about you, Craig?
It was an aha moment. It was right after the ACA. I was aware of this. So this, like 2013, 2014, I was aware of what this was, but I kind of thought, man, with all this stuff going on with the ACA and mandatory loss ratios and all this stuff they're doing, medical loss ratio mandates, I thought, is this going to even work in the new world? And I think it was about 2015, the federal government issued a bandolier of regulations that made it very clear reference-based pricing was going to be allowed to continue, and it was going to be a valid solution. And I remember as a law geek reading that thinking, oh. And it was probably like 2015 was like, yeah, let's go. Let's do it.
You're based out of California, and it's, in my opinion, it still hasn't really...
Infancy out there.
Yeah.
Yeah. Let's not talk about that. Let's just not talk about that at all, and I'll just let you handle out here, and I'll take it out there.
Split it at the Mississippi,
Yeah. You can have the other side of the Mississippi.
But the discrepancy in I think broker knowledge by geography is real. I mean, on the West Coast, you see a lot of employers that are 1,000+ employees that are still fully insured.
Yeah, trust me.
Why is that?
Bloat, laziness, and ignorance at the consultant level, and just these large bank-owned, publicly traded, private equity-owned consulting firms that want to worship at the feet of the national carriers and eat those overrides every day long. It truly makes me sick. I hate it. I've hated bullies all my life.
I think we can distill it down to one word: greed.
Greed, yeah.
I think it's greed.
Yeah,
is what we're talking about.
But in California specifically, and a lot of the West, the HMOs took over, right? So Kaiser first, and now we've got a number of local HMOs. And then you also, if you're talking Northern Bay Area, you have the tech industry where they don't want any sort of pushback. They don't mind spending a ton of money on benefits. So it's this like combination of greed, laziness, the tech industry where they're really not worried about saving a bunch of money, and then HMOs that have gobbled up the market and don't give you claims data to make it really hard to self-fund. So all that comes together and you get this, it's like California is like the worst of what the nation has with respect to healthcare pricing and healthcare collusion.
Well, yeah, basically you have complacency on steroids is really
yes.
what we're talking
Yeah.
about. And all those factors, in that area of the country make perfect sense. In our area in the Midwest, which, comprises, I don't know how many states stretching down into the South, what you'll find too, and, we were talking about this, it came up in another conversation, is that you'll even see when you get into some of the more rural areas where there are some very large employers, primarily due to the low cost of labor and things of that nature, but you'll run into these small county hospital systems that have monopolized those areas and even been able to, push around large national carriers just to be able to provide access. So when you go into those areas, those are some of the ones that are most hard pressed, for a solution because they don't realize that they're being held hostage by small hospital systems, at very low discount arrangements and things. And that's happening because they can, because of proximity, and then also too, if you look at their workforces, a lot of this is manual labor, they may be well compensated for the type of work that it is, but at the same token, if you're running these situations where they're given a 5% token discount on an evergreen contract, just so to say they have access with no balance billing, but you see a member who's going and getting their blood work done and they've got a $650 deductible expense.
Yeah.
That whereas on a reference-based pricing model, you're seeing a 90% discount on those lab services, which is what you should see typically. So with those types of things, I think bringing, clarity to it and, shining a light on these types of things, because most all of what we do, I think it's more education than anything else. So many people don't know why their costs are high. So many people don't know why their rates go up, and, we get into a whole conversation about management of risk. And, it's like the top 5% of your claimants drive 50% of your claims. Always.
Yeah, when you talk about education, it's so interesting. I just had this conversation with Shea Butler, who's one of our newer sales teammates. We were talking about, he was telling me, I coach, this sport for my kids. And I said, being a coach is such a valuable skill set in the RBP space because you are a teacher first. You are a teacher and a coach primarily. And then you get to the end of the thing and you get to sign the deal and you close the sale. Education is just such a huge imperative part of it.
Yeah, it is. And people ask us all the time, like, where we have business. And my answer is, well, nowhere and everywhere, because we're following guys like this who can go start that conversation with an employer and do that education and get them all the way to the finish line. And so, like, we're very pocketed a little bit in California, a little bit in Ohio, a little bit kind of all over the place. And it's directly a product of going back to what you guys were saying about the combination of greed and laziness. We have to find these guys to come in and help change the landscape a little bit.
And just like you have to find us, we have to find the clients that are right for it. Because there's so many like Bay Area tech companies, for example, that I won't even bother talking to because that's not my jam. Like, I'm not here to like provide you the most expensive fluffy benefits. Like, you can talk to a different broker for that. Like, I'm here to save you money. Like, I'm going to cut your cost by 30%. And so I'm looking for those gems that they're in need and they're ready. And then they've got people that care. They've
That's
got
right.
an HR team or a CFO or somebody who really cares. Even in California, there's plenty of that. Central Valley, ag, northern part of the state, nursing homes. There's plenty of those industries where they need to save money, and that's what we're doing.
Well, I think that's the opening point of any conversation. It really has to be with the employer. How dedicated are you to doing this? This isn't a one-hit wonder.
right.
You're not just going to do it 1 year and see how it goes. You have to be committed to this for at least 3 years, typically, is what I tell them, because, it's not a quick and easy solution. You're always going to have those situations come up about access. You're going to have that situations come up about balance billing. And, you need to get out in front of it with people and just say, this is what's going to happen. It's not if, it's when. It will happen, and how committed are you to the solution?
Right.
And, and that's a really, so for some people, especially, in the tech sector, that's a very difficult conversation to have. We've had clients in that sector on it, that it's just not their thing.
Nah,
And
I don't even go there anymore.
exactly.
I'll let them find me if they want to do it.
Correct. And then, you want a commitment from them. You know,
Yeah,
how committed
right.
are you to this?
Well, and it's the question I love to ask is, how valuable would it be to you to spend 30% less than your competitors when you're trying to compensate top talent?
Exactly.
That's the question. Because this is their second or third largest expense, healthcare, and it's real. And if you install RBP and you don't save at least 25%, you're doing something wrong.
wasn't
at least
worth
in
the effort.
California. Yeah,
Right. Yeah.
you are slashing these prices. I was just in a competitive situation where I had a broker
Let it go, Craig.
poo-pooing the fact that we said we could save 30%. And I'm like, well, he doesn't know what he's doing. I mean, he was saying they're only going to save 10%. And I thought, all right, it's not worth doing. Like you just said at 10%. You're not going to save 10. You're going to save 25 to 40 when you go RBP.
Well, you know, you lose the value proposition too because
Yeah, because it's harder.
it is harder. I tell people right up front, this is very hands-on. You're going to be involved. You're going to need to be engaged. The member needs to be engaged. You know, this is not a fire and forget type of thing. This is the way that it works. And, you know, once again, it comes back to commitment. And it comes back to, you know, having the team of people, whether it be internally or with your vendors or both, that's able to explain it, hold the hands, do the right thing, keep people, you know, on calm, for lack of a better term, you know, and just say, hey, this is what's to be expected, but, you know, any good result that you're looking to achieve, you know, this is what you're going to have to go through to get.
Well, you mentioned saving 30%. I think the magic number is 20. If we can't save you a minimum of 20, it's not even worth it.
Not gonna
But
get
we've
out of
seen
bed.
them.
Coming out of self-funded maybe.
Yeah,
But if
yeah.
you're coming out of fully insured California HMOs,
Oh.
it's going to be
It's gonna be
30.
30.
We've seen them
Yeah.
up to 50, but
Yeah.
my point is that I think if we don't think we can save you 20, let's not even do it this year. But we've seen them upwards of 45 matured. I mean,
We got one right now, 43.
yeah, I mean to me that's wild. And so
Yeah.
we've seen different brokers that have asked us for bids that we find out later they might have been playing with our numbers to keep the business where it is or
Yeah, yeah,
just
yeah.
to renew
That
it 'cause
happens
it's
all the
easy.
time.
Manipulating.
Let's
yeah.
say that specifically. Let's not dance around that. So I want people to understand this. There are brokers that will take a bid from ClaimTalk or any other reference-based repricer, see that the savings are too much, and inflate that number, reduce the savings. Now, they might do it by building in more commission for themselves that they're not disclosing in that first proposal. They may do it a bunch of different ways, but just understand that, clients. There are brokers out there who will falsify the savings projection because they really don't want to do this and they want that override from a national carrier.
And they want to be able to check the box and say that they looked
They
at
want
it.
to say they looked at it. They want to say they did it. And if they're competing against me, they're going to get the client so excited about it, they're going to have it rammed down their throat, which is what's happening.
Or even better, here's a better one where they'll take the reference-based pricing quote, you know, and they'll slap a carrier network on it to make it look like it's a carrier quote. I don't know if you've ever seen this done.
Oh my gosh, no.
To then take it back to the incumbent carrier to get them to come down significantly.
Oh my gosh.
We've seen that.
Wow.
Yeah.
That's a new one.
The links that some of the broker community will go through to do less work
It
is
is
appalling.
criminal.
Yeah,
It's
it is.
look, take it from a guy who's been, I know you've kind of done your own thing for years.
Many years, yeah.
I've been in small agencies, mid-size agencies, large agencies, and now I have found my home and I'm going to die at the Mahoney Group, a 250-person employee-owned company. I'm going to die there. And they'll
You
have
guys
to
want to
wheel
buy
me
some
out.
RBP?
They're going to have to wheel me out. So, but everywhere. People don't become brokers because they're actuaries or attorneys or underwriters. They become brokers because they were good at selling something. So now you've got this situation where you've got a failed car salesman or whatever, wherever sales entity they came from, and they're trying to slap in reference-based pricing, which is the most complicated, difficult thing you can do in healthcare. And it's a mess a lot of the time. So I'm sorry, I didn't mean to make your product hard to sell, but that's why you got to find the Mikes and the Craigs of this world, because you try and do this with Johnny Broker down the street, oh boy, let's go. I'll watch that. Give me some popcorn.
Yeah. Oh yeah.
Well, and I think, you know, something else that you've seen a couple of the major carriers get into the RBP world as well, or they're getting into that space. And, you know, they're looking for any type of distribution channel. They don't care who the brokers are that are selling it.
Right.
Because they're trying to build, you know, that block. And they've been very successful with it. They take a super soft approach to it. You know, they'll settle all the way up to build charges if necessary, you know, which totally erodes the value proposition, as well as, you know, what you look at the claims dollars. You know, you're going back to your employer at the end and say, oh, yeah, we had this one hospital situation where we had to pay billed charges. So, you know, your claims account's exhausted,
Yeah.
but it's going towards your stop loss. So you'll just have to deal with it at renewal. renewal, which that's no different than a fully insured renewal at that point. So all those types of things, I mean, this is a very complex conversation to have with several different things that are being factored into it. You know, you have your reinsurance piece, you have your pharmacy piece, your repricing, all those, the advocacy, all those things have to work in concert together to get to the common goal.
Yeah.
And I think, you know, so many people, goes back once again to what's happened to the industry. They're so sales driven because they have to be.
Their
Revenue
classes
driven.
are on sales, not learning insurance.
Right. The numbers they have to hit are insane. And with that being the case, you know, this is the client suffers.
And I don't want to make it sound impossible. Look, there's people like Mike and I out there, and you know, there's 10, 20, 30, 50 of us across the nation, 100 maybe, according to Omar, that he's still the case.
You're a
with.
dime a dozen, man.
There's people, yeah, we're out there. But there's people that give a rip. There's people that have seen this and hate what's going on and are bending over backwards to do what's right by you, and that's really what this is.
That's exactly what it is.
Because you've seen all of the waste and the bloat, all of the fake pricing in the system, and you've said, it doesn't have to be this way.
Well, there's only so many other levers that can be pulled. So, I mean, how many times have we all...
Unless you're the tech industry. They just keep pulling
well, that's the money lever, you know.
Yeah.
Yeah. But stop and think how many times you've walked into one of these types of situations where you see maximum deductibles, you see where all the costs have been shifted to employees, and there's nothing left to do. And it
Nowhere to
may
go.
be...
Yeah.
And it may be just a driver of, you know, 2 or 3 bad claims years. Sometimes it's bad luck. Sometimes it's bad management. You know, there's all different types of reasons for it, but there's nothing else out there that can reset the clock, basically.
Yeah, what you just said is my ideal target.
Yes.
Where I call it the plan being maxed out. Like
Correct.
The blue collar employees have a $6,000 deductible. They can barely afford that. The employer can't contribute anymore, and they just got a 20% renewal.
But think about it a little more. How many people have $6,000 laying around for anything?
Well, the statistics say hardly anybody.
Exactly.
Yeah.
So when we look at that, I mean, it doesn't matter if it's 600 or 6,000 if you don't have it.
Yeah.
You know, and that's what we hear. So I didn't mean to interrupt, but that's just a key point that, I mean, we hear this all the time from employees and employers. Hey, my people, you know, no matter how much I'm paying, everything else costs them more, you know, and they can't pay for this.
Yeah. No, I mean, people ask us all the time, well, what's your sweet spot? What's your honey hole? And it's really not industry or size specific. It is that scenario where the employees can't afford it and they're at a $6,000 deductible,
Right.
and the employer can't kick in anymore, and the renewal just came out and it's 20 points.
Yeah.
Right.
Now we got a deal.
Yeah.
Yeah,
And
we're
I'm going to
looking
take
for
that deductible back down to like 1,000
Oh.
in this case too. That's the other thing that
Yeah.
people don't understand. When you go RBP, the first thing we do is get rid of the deductibles, and the clients are like, "Wait a minute, what? You're
Oh,
going
yeah.
trust me, it's all right. We're going
You
to
can
take
do
your
it.
38% savings down to 31. You're going to be fine.
And you can do it.
Yeah, and you get rid of the deductibles. Like, so it's like that's always part of the deal. Is like, hey, we're going to make this plan a little bit rockier. We're going to have you pave the way and do some things before your open enrollment date. But we're going to make your plan better. Your copays are coming down. Your deductibles coming down. Your RX is getting better.
And I
Yeah.
would also argue, too, though, that when we make the employee get so involved in their healthcare consumerism, we're doing something that they should have been doing already.
Yeah.
So we're making them get educated about their plan. We're making them activate, engage, talk to their doctor's office, open their mail. These are things we should be doing anyway, right?
And they're
So-
willing to do it when you make it a win for everybody. So when we have consultants that trust us enough to go talk to their client with them, and you can sometimes see the light bulb go off between the CFO and HR when you say, hey, look, you're going to be spending so much less on claims that we can drop your employee deductible and we can drop their deductions. Now they're okay with it because they're spending
Less money.
$200 a month less or what have you. So they're okay with going through our pave the way process. They're okay with not having Blue Cross on their ID card because they just got a raise.
Right. That's right.
But you have to highlight that, though, too, because something that's been lost in the industry, and Craig can probably, you know, agree with this, is for so long, because of Section 125 and pre-tax payroll deductions, no one ever looks at their gross. It's always their net. Yeah. So, you know, you have to point out when you do these types of things that are a positive, you know, at the employee level, that really needs to be highlighted. And I think that's lost oftentimes, too.
No, I agree.
And you stop and think, too, about the actual percentage of people that actually interact with the health plan on a regular basis. You know, it's less than 20% of the health plan on a regular basis. You know,
High utilizers,
Well,
right?
a third of people aren't even going to the doctor in a given year. So yeah,
46% uses under $150 a year.
That's right. That's right. Exactly.
And
Yeah,
people forget about that.
I like to read all the benefit trend studies that come out every year. MetLife does a good one that I read every year. And it's overwhelming. Like what employees care about by far the most is what's coming out of their paycheck. Well, we can certainly solve for that.
Right.
The second thing they care about the most is how much do I have to pay when I need to go use it, right? Copays, deductibles.
exposure, right.
Yeah.
Yep.
And then the third piece is who's the carrier. So everybody's so worried about having a big network name on their ID card. That is by far
The least
behind
important, yeah.
payroll deductions and
Because
out-of-pocket
even that
maxes.
is really, that's really just a proxy for which doctors can I go to.
Right.
That's because really, they really don't care if it's Purple Cross or Green Shield or whatever the heck it is. What they really want to know is, can I go to see this doctor at this hospital?
Dr. Jenkins, that I've been seeing for 20 years. Can I still see him?
Yeah.
Right.
Well, I think the other thing about PPO networks is too, I mean, that question comes up, in every meeting. But, really what the PPO network has lost its value significantly.
It's a scam.
In the last 25
It's
years.
just a scam.
It completely is. And what people don't forget about is this, or here's what they always say, people think that the PPO network is access to care.
Yeah.
No, it's guarantee of payment.
Yeah.
And also, too, you got to remember that the networks don't view our customers, our clients, the end user, the employee as their customer. The networks view the hospitals
Correct.
as their customer.
Correct.
And so with that being said, who are they going to, all you hear about when you're dealing with networks is, hey, we got to have as many providers in that network as possible, and supposedly there's still people out there in our industry that are talking about discounts at the hospital.
Yeah.
I mean, and it's just ridiculous because the reasonable value of service no longer correlates anywhere near to the price charged.
So just real quick, if you're thinking about a PPO network, just remember what you are doing is you're marking up something 600%, and then
more.
and then giving or more, and then giving the carrier $25 per employee per month for the privilege of a 50% discount on that 600% markup. That's what a network does.
What do you guys think? Because consultants do this consultants with really big cases do this all the time. They do network analysis. They want to know which network is going to save their client the most money, and I think it's nominal. Like, okay, I don't care if it's Blue Cross or United, Cigna, and whoever, they're all going to be within a couple of points of each other. But people spend so much time on that. What's your take on like network analysis in general? Does it matter if you go from Blue Cross to United?
No, it doesn't.
In any reasonable way?
I think it's a bit of a smokescreen.
Not nationally.
Nationally, because here's why. When you look at, let's just talk about Blue Cross Blue Shield and United Healthcare being the two largest national networks, leaving out Aetna and Cigna because you'll see those in the rental markets of the TPAs, which the discounts they get versus their own product, that's a totally different discussion.
Well, again, national average is a different. Like you look at any one hospital, and Cigna could be the best.
Exactly.
It's just no rhyme or reason to it.
Correct. But if you look at Anthem and United Healthcare or Blue Cross
Yeah,
Blue
they're
Shield,
going to be the deepest national.
always because
Yeah.
of volume, at least that's what they'll claim. But then they're interchangeable.
Very.
It's always interchangeable. So that's why, when you're dealing with HR professionals, they're like, oh, as long as I got one of these two, I really don't care, because I know I'm not going to have access issues because they've almost become identical to each other.
Yeah.
Yeah.
We were talking about, losing earlier, and I lost one that I thought we had done, and we ended up not getting it. They're going from Blue Cross to United because they're going to save 2 points maybe. I don't know.
Yeah. Well, guys, this has been a great conversation so far. I want us to all stay tuned. We're going to have part 2 of our broker conversation here with Mike and Craig coming up. Please make sure that you like, subscribe, or follow us on whatever platform you're using to tune into your podcast. We look forward to continuing the conversation with Omar and I.